Alright, let's dive into this Ethereum ETF drama. It's like the crypto world's version of a reality TV show. But instead of roses, we're handing out regulatory approvals. So picture this. It's July, and the SEC decides to play Santa Claus, dropping 8 spot Ether ETFs down the chimney. Talk about Christmas in July, right? Now, you might be thinking, hey Kim, what's the big deal? We've seen Bitcoin ETFs before. Well, honey, Ethereum is like Bitcoin's cooler, more versatile cousin. It's not just about hodling and hoping for the moon. Ethereum is the blockchain equivalent of a Swiss Army knife. It's got smart contracts, stablecoins, and more bells and whistles than a carnival. But here's where it gets spicy. With great power comes great regulatory scrutiny. Yeah, I said it. The SEC might be eyeing Ethereum like I eye the last slice of pizza at 2 a.m. They're probably thinking, if it can do all these things, we better keep a close watch. Also, keep a close watch to check if you're subscribed to our channel. Remember, your engagement greatly helps in the growth of our channel and the improvement of our video quality. Alright folks, let's get to the Benjamins. On day one of the ETF launch, it was like a Wild West showdown. But instead of guns, they were wielding big fat checks. BlackRock, Fidelity, and Bitwise came out swinging with $266 million top, $71 million and $204 million respectively. I mean, it was like they were in some kinda who can attract the most money pissing contest. And the smaller ETFs were just trying to keep up like the kid in school who's all, hey, I got $2 million in my lunchbox too. Yeah, it's a small lunchbox. Double-digit millions. Yeah, that's cute. You know, folks, the plot thickens. So you've probably heard of Grayscale Ethereum Trust, the OG of crypto trusts. Well, their Ethereum trust just converted to an ETF, but hold on to your seats because this comes with a major catch. Their fees are 2.5%, higher than my heels on a night out. That's 10 times more than the competition. Ouch. You might be thinking, what's the big deal? Well, this trust used to trade at a huge discount, up to 60% off at the end of 2022. I mean, it was like a Black Friday sale. Instead of a TV, you got Ethereum. Kind of. Some smart investors snatched it up, hoping it would convert to an ETF one day, and now that day has arrived. They're cashing out, realizing huge gains. I mean, we're talking $1.5 billion in outflows just in 4 days of trading. It's a happy day for those who took the gamble, but don't think the party's over. There's still around $7.5 billion in there. Plenty more to go. But don't fret, the outflows are being somewhat balanced by inflows into other Ether ETF. Leading the charge is the BlackRock Ether ETF with a solid $440 million in inflows, followed by Bitwise and Fidelity. The net balance? Around $350 million in outflows since the ETF launch. So, what's the real scoop here? Ethereum ETFs are making waves, but the crypto market's giving us the cold shoulder. ETH is down 7.5% this week, looking about as thrilled as a teenager at a family dinner. And that Ethereum Bitcoin ratio, it's flirting dangerously with 0.045. We're seeing some cash flow into these new ETFs, but let's be real. The lack of Ethereum excitement is more concerning than finding a typo in your smart contract. It's like throwing a party where everyone's just standing around, waiting for something to happen. Now, don't get me wrong. Ethereum's still the smart contract superstar, but its crown is looking a bit tarnished. As a platform for layer 2s, it'll probably be fine. But short-term price-wise, let's just say I'm clutching my hardware wallet. Strap in, folks, this ride might get bumpy. Remember, we read all your comments, so be sure to share your thoughts. And I'm off. Whoa!